Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn Associates, and this is your weekend edition of your financial market wrap-up, and this is for Friday, the end of the quarter, the end of the month, September 28th, 2018. We're about just after 3:30 p.m. Central Daylight Time, and this will be about where the market's going to settle. At 3:15, they settle up in the futures, then they reopen at 3:30 again, and that's about where you're at. Nice day for the silver, obviously. The dollar index up, and they're still rocking and rolling in the eurocurrency because of Italy, as you know. Italy wants to take its debt higher, up to 2.4% of GDP versus what their economic minister had originally wanted at 1.6%, and there'll be some battles that you can imagine going on about that. Obviously, the market was all enamored this week with the Brett Kavanaugh situation. Enough said about it. Now we'll get into next week and see what comes up, if anything new. And then I guess a vote will be a week from today, possibly. I don't even know what the details are. But let's go to the charts, because that's what this is all about. And when you come to a monthly area chart of only closes, you can see how the market since 2016 has just stayed over that 18-month moving average of closes. And this last thrust went from right here, and you've gone to new highs. You finished up the month 20 points higher, roughly. Pretty strong. The weekly area chart of closes, for the week, it looks like we're going to be down in the 12-point area here. You had 29.34 as your high point. That was last week, and you've backed off a little bit from that. But as we look at the channel of this chart, it's still very much trading within an uptrend channel, hasn't stepped out of this. If you take the low point back in the April-May period, and you can see it right through here, market's done a nice job. Let me get the swing lines. On the swing lines, you have a pattern of consistent higher lows. See that? And the higher high pattern. So the market is just continuing to grind on in a bull move, and I'm not disappointed with that. That helps all of you with your stock investments and the like. In the futures, you can see you've stayed over the 18-week average, which is over the 100-week, and the 100 is over the 200. It's been a long-term bull market. In Bollinger Bands, you got up to resistance again. Now, if you'll take a look, see these black dashed lines? They're called Bollinger Bands. They're an algorithm designed to keep the market trading within them 95% of the time. It is not uncommon to hit the band, back off from it. And if you look at the pattern here, I think it's explaining itself. In my charting course, I think I do a good job of explaining that. And by the way, we're offering a big discount on the course that I'll talk about right after this. But you're riding that band higher, and momentum is still locked in bullish. So anyone that's saying, nah, the market's been high, blah, blah, you get corrections, but overall, this is still very much a bull market, as is the NASDAQ. Now, the NASDAQ had a consolidation pattern of the past 3-4 weeks, and this week it came to life again. You can see it's up 88 points for the week in momentum, still very much in the bull pattern. It tried to correct a bit, and you can see that right through here. And then the market just sort of flattened out with this break, and now you're back into that uptrend, and momentum is working with it. In the Dow, this has been your powerhouse, and you can see how it just sits against the upper Bollinger Band like the S&P, just grinding higher. The industrials have been a play that's been in favor for a good part this month, certainly this week, and certainly this quarter. And you can see that just in the market there. Where the weakness stepped back into the market were the smaller caps, the Russell, and you see that you got up to the Bollinger Band. Now you have fallen back to that 18-week moving average of closes. The last break low we had was 1662.50. You did not get to it this week. You held support as you hit the 1694 level. The trend still up, but there is divergence. You have momentum leading the price down. Price came to that 18-day average, and like we saw in the NASDAQ, will the market flatten out here and try to move back? We'll find out at the beginning of the quarter, obviously. In the VIX, This should look very familiar to you as it did way back if you go back a year ago and a year before that. This tightening range. Other than when we started off this year and had that blow up right at the beginning of the year and then the pull back down, ever since then, all the market has done is put back into it that there's very little volatility, and that continues to be the story. The overall pattern is still one of lower highs and lower lows, and it's finding resistance against the 100-week average and the 18-week average of closes. In the notes, we had the Fed play. Now, will this be similar to other moves in the Fed when the Fed comes in, makes a move on the interest rates, which have been hiking on and on again, and then bounce like it's done in these other times? If you go back and you tie these into where the Fed made its moves, you'll see what I'm saying. I can't answer that other than to say the pattern is one where you have a higher high, a lower low. When we try to stay under these Bollinger Bands, and if you look at where you're at right now, you're 2 weeks under in a row, the lower band, the odds favor the market's going to try to get back in it. Momentum down, bias down. When you come to TLT, the ETF, lower highs, lower lows. And just like you did in the futures, you've hit that Bollinger Band and the market's trying to consolidate and figure out what to do. Unlike the futures, this is in a downtrend. And the question is, can it break out of this pattern or not? So far, each time you've come to these patterns, be it the Bollinger Band on the up here or downside, it has, within a short order, gone back into that sideways pattern. In the dollar index, you have a pattern of lower highs, lower lows. This was the week where the market finally gave you a good-sized bounce. It's up a full 100 points, roughly. Resistance, though, comes in between the 18-week average and the 100, between 95.28 down to about where you're at right here. We'll see what the market's going to do with that, but the trend still to the downside. You'd have to take out 95.68 to break the pattern of lower highs, lower lows. You would think the opposite of the euro, and you'd be right. You have the pattern of the higher lows, higher highs. You got up to the upper Bollinger Band, and bang, you fell right back to what I call that line in the sand. What's really happening here is you're starting to spin and consolidate prices. A lot of people think the euro is going to come to life later as the central bank there starts moving back away from their QE policy. And if you're looking at a lot of the statistics, even though the euro got hit this week because of Italy, if you're looking at what's going on in Germany, unemployment dropping rather dramatically, even the Brits are doing well with Brexit, and France is doing well. So we don't have all the problems. When you look at this chart, you can see that this should be the support zone, and you shouldn't take out the 115.30 level if you're going to stay in a basic uptrend. In the pound, even though you're down 40 points for the week, all you did is you had a big rally. You came here from these low numbers, got up into the 133 area, came up all told about 6 cents, and now you're getting a bit of a pullback. It looks like you're going to close just under the 18 and the 100-day average of closes, but you still have the pattern of higher highs, higher lows until you take out 127.91. Momentum has not turned down. Canadian dollar, well, it looks as though Canada, with their statistics that came out today, looks like their central bank as early as October, I think it's October rather. I keep forgetting we're September 28th. Could raise their interest rates at their next meeting. And the market took that into account today with a good rally, kicked the market back up because for most of the month it's been under some pressure because obviously we haven't reached a deal with them on the trade talks. The resistance right up here, 77.71. You're over the 100-week average. If you were to slip back, I would look for support between the 18 and the between the 18 and the 100-day average of closes. Momentum is still up, but not trending. The market is spinning more or less in those sideways Bollinger Bands. The Japanese yen has been riding now for about 3-4 weeks, this lower Bollinger Band, trying to push the market to the downside. Momentum is down, bias is down, trend is down, all three parts to that market. In Bitcoin, when you go to the weekly chart, you have lower highs, you've had lower lows, you've come back to the 18-week average, sort of playing around here. I'll be doing TikTok for Bloomberg on Tuesday morning, so if you get that, you'll see I'll be commenting on it and give you my ideas as to what that is doing. Then we get to the energies, and you know that November 4th is the day that we're going to see the U.S. sanctions on Iran full tilt on their oil. The market has been running up in anticipation of this. You're getting such a big run that, you know, in the back of my head at least, I'm starting to say, gee, you keep this going. Is it the old buy the news, you know, buy the rumor, sell the actual news when it comes out? That could be the case that we run into. The pattern has certainly been one recently of higher lows, higher highs on a closing basis. The last high we got to was a differential between WTI and Brent of 10.98, and we're sitting here back to 9.22. When we come to the energies themselves, very important. I want to take off this week. Look at the sideways action. You've been spinning. You failed down here to break through the downside. You've gone to the upside. You're over the upper Bollinger Band. Now, only 5% of the time will the market stay over or under a Bollinger Band. It's not uncommon to hit it, but over it often leads to the market at least pulling back to it. We'll see if that's the case. But I will say momentum is up. Certainly the bias is up, but you don't have that pattern of higher highs, higher lows. You do in WTI crude. WTI's got the higher low, higher high. Resistance 74.53, the upper Bollinger Band. Unlike Brent, this hasn't hit it. It's being more or less pulled along with what the Brent is doing. You're up 276 points for this week, but as you can see, Brent gained on it about $1.20 overall for the week. In the gasoline market, we have, from the bigger picture, still the lower highs, lower lows. Now, you wouldn't know that looking at the daily charts. This chart has it. You have divergence to a degree on the chart. While the swing line is down, you're going to finish up over the 18-week average of closes, so that negates the downtrend of the swing line. Bias turns back up and momentum up. If momentum's leading price, we'll see if the market can get up through this 215.55 level. In nat gas, it's been a story of higher lows, higher highs. The market went up, challenged again the upper Bollinger Band, and got thrown back. That number was 305.80. You got to 31.11, and now you're back to the $3 mark. That's a lot of ones in there. Now we'll see if the 100-day average and the 18 can hold the market. But this market's had a good bid to it. And you wouldn't have thought so with China not buying our natural gas and so on. Interesting stories. As I said on my charting course, my course normally runs right now $129.95. There's two things I want to say. That price is going to go up. That's number one. Number two, I'm offering $40 off the course if you use the code SAVE40, all one, no spaces in between. Save 40, it's $40 off. That's the concept. And in the course, it's completely full of, it starts with videos. So I'm going to teach you my different techniques of the swing lines you see here, the Bollinger Bands that we talk about, my ideas on the slow stochastics, what is an embedded stochastic, how do most people look at stochastics, the different moving averages, and there's more than you see that I do in these videos for YouTube, a lot more. I only show you part of what we do when you're watching these. There's definitely a lot more, and my subscribers get to see that. And with the course, if you're not a subscriber to my research, you're going to get 30 days free of that. That's a $60 value. The charting software included with it is roughly a $100 value a month. So the course is $129.95. You're going to save $40, and you get the benefits of the other part. My twice daily updates, actual trade recommendations as they come out, my morning videos to get you set up for the day, and of course the videos themselves. Again, in order to get it, you can call my staff. You can go to our website. This will only last this first week of October. Then it's gone. So give you fair warning, and I'm going to raise the price after that as well. You can click up here too. That'll take you right to the front page of our website. Go under education. It's all there. Save 40. That's the code. Have a great weekend.